Wendy's out with earnings ahead of the after the opening bell here today, and Todd Penegor, Wendy's CEO, joins us now, fresh off his earnings call. Todd, always great to get some time with you. Like Brooke was just talking about, seeing a lot of mixed trends in the restaurant industry. You talked about July on your call. What are you seeing in the business right now?
Yeah, we've seen a nice acceleration as we've talked about our step up in 1 year. Same restaurant sales comps will be more elevated in the back half of the year as we kind of get to more clear air on comparables. But what we've seen is a nice sequential step up in Q2, exited with really strong numbers in June, and that momentum continued into July. And it's great when you got some great items like the all-new strawberry frosty that really drove a lot of excitement, and we're seeing a lot of trade up from 4 for $4 into $5 biggie bags. So it's creating a lot of momentum, not just on sales, but on traffic into the restaurants.
Breakfast continues to be a focus by you. I believe you recently came out with French toast sticks. They're coming back in force, but the breakfast business, is that running positive sales?
We were flat on breakfast sales in the second quarter. Year to date, we're up about 1%, but we're seeing some nice sequential trends. We've gone from about $2,500 a week per restaurant in the first quarter. We're now north of $2,700 running in the second quarter. On our way to $3,000 by the end of the year is where we expect to exit it, well above our break-even point at $2,000 per restaurant. And a lot of news coming. The French toast sticks, we don't play in kid, we don't play in sweet savory. Gives us another opportunity to bring in more traffic, but also to remind everybody that Wendy's has a great breakfast every day. So we're really optimistic about the future of where breakfast can go for us over time.
Do you think you finally have convinced the street that breakfast should be at Wendy's? Wendy's has a right to play in that category.
I sure hope so. I mean, you think about where we've at. We launched in the middle of the pandemic. We've managed through some more challenging times with the category being a little bit more impacted and not growing like it has historically. And despite all of that, we've been able to break through and drive north of $2,700 per restaurant. In our legacy restaurants where we had breakfast before we launched this thing national this last time around, we're doing well north of $4,000 per restaurant. So we've already ingrained the habit in those restaurants. We've only had 5 restaurants temporarily opt out and not serving breakfast. So we got a system that believes in it, which means the consumer does believe. And we're absolutely confident as routines get back to really normal. You get into the fall, you get into kind of, what the next routine will be for everybody, that breakfast at Wendy's will play a big role in that day part and that drive in the morning.
I was talking to you yesterday, Todd, the CEO of Dine Brands, IHOP and Applebee's, told us he saw 20% commodities inflation in the second quarter. The number blew me away. Then I saw you guys highlight on your call 15% inflation. What's going on here and when does it end?
Yeah, no, I mean, we ran 19% commodity inflation and 12% labor inflation. So despite all of that, in the U.S., we were still able to deliver a 15% restaurant level margin. If you go back to 2018, 2019, pre-pandemic, we were running about 15.5. So we've been able to weather through that storm and still drive some profit to the bottom. As you saw the CPI get released today, we are expecting some moderation of inflation, still inflationary in the back half of the year. But we do think labor will be more in the line of high single digit as, access to labor is becoming more prevalent at the moment. And we do think commodities will moderate. And on a full year basis, we're now expecting commodities to be in that mid-teens range, which means it will slow off of that 19% high that we had here in the second quarter.
Todd, do you think these high levels of inflation that you are seeing and the industry is seeing is putting or just causing workers to come back and look for jobs in the restaurant industry, whether it's a side gig or because they recently got laid off?
Yeah, no, we're seeing that, as folks have worked down savings rates and, start to look where their next opportunity is. We have seen the applicant flow continue to pick up. We've seen our staffing in our restaurants continue to improve. And importantly, as we get folks in, we're seeing, 30-day turnover and longer day turnover numbers improve dramatically, which means we're bringing them back and we're keeping them, which means a much better experience for the customers. We're going to have better speed of service and better overall service as we get a lot of reps with folks that have been with us for more than, a few days serving our customers food. So that's all positive. And I think that lends into our optimism that there'll be a little less labor inflation in the back half of the year. But importantly, those are our same customers. So as they're all making a little more money, disposable personal income is the number one driver in the QSR business still today. That's an opportunity for our income and our lower income consumers to come into our restaurants more often into the future.
Double-digit sales growth overseas, does that reflect your push into the UK market?
It's beyond that. So we don't even have the UK market. We only have one restaurant that hit its 1-year anniversary. So those numbers don't even include same restaurant sales in the UK. You look at the success we've had in Canada. We've been delivering double-digit comps on a 2-year basis for quite some time. We've been gaining share. We had the introduction of breakfast. It's off to a great start and in line with our expectations there. But we've seen widespread recovery. Puerto Rico and our international business segments absolutely on fire. You start to look at many of the Latin America markets, the larger Asia Pacific markets. We've seen widespread, really strong growth and have most of our markets well above 2019 levels at the moment.
Todd, lastly, the one thing I didn't see in the press release or talked about on the call is the situation with Tryon. Now, since we last spoke, it was reported that Tryon was exploring something with Wendy's. Do you anticipate any resolution soon?
Yeah, I really can't comment on where Tryon's going with their amended 13D filing that went out, I guess, 3 months ago now. But I'll tell you what, we've got a great partner in Nelson Peltz and Peter May and Matt Peltz on our board. They continue to add a lot of value, have a personal, strong relationship with those guys. And what we're always going to do is continue to partner together to really make sure we're driving a strong restaurant economic model for our franchisees, because we know when that happens, everybody wins, right? We're going to reinvest back into the brand, into our people, into our redesigns, into technology, because the franchisees are making more money. And when they're reinvesting, the company's just fine. We'll continue to drive nice, solid growth and great returns.
All right, we'll leave it there. Wendy's CEO, Todd Penegor, always good to see you. We'll talk to you soon. Stay safe.